Hi friends, as you can see on my screen, throughout October 2024 to Feb 2025, FIs have done huge selling in the Indian stock market. There was a slight relief in the month of March, but again in the month of April, as of 17th of April, you can see that FIs have done around 19,000 crores of selling in Indian stock market. Now, in spite of these huge selling by FIs, are there any Indian stocks where FIs have done buying? So in this video, I'm going to give you totally unbiased commentary on 4 such stocks where FIs have done some buying very recently. What makes these stocks very special that has driven the attention of FIs, what I would like to discuss in this video. Please do not take these stocks as buy or sell recommendations. My intent is to bring you amazing insights about growth stocks in this particular video. Just before I start, in addition to investing your money, investing your time in your own growth must be your top priority. Otherwise, there is a risk of becoming irrelevant tomorrow. So here is an amazing growth opportunity, absolutely free. Growth School is offering a fantastic 180-minute AI course, which is absolutely free for the first 1500 people. The AI sector is gearing up to create big success stories, and therefore people who are investing in AI skills today are going to enjoy phenomenal career growth tomorrow. In this crash course, you will learn how to sort complex data in Excel using AI, how to develop AI agents, how to frame business strategies using AI, how to find good paying jobs using AI, how to use AI for salary hike, how to build personal brand using AI, and more than 25 AI tools. That's why I'll recommend you to this 180-minute AI crash course. Usually it is a paid one, but now it is made free for first 1500 people. You'll find the link in the description and in the pinned comments. Register now. With that, let's start our discussion with stock number 1. So the stock number 1 is the Anup Engineering Limited. Let's go to the investor section and see what is FIs and DIs have been doing. So what we see here is that FI stakes in the last 2 quarters have gone up. If you look at DIs, their stake have also gone up. But you might say that, Rahul, this is a December data. We don't know what has happened in the month of February, January, March. So if you go to trade sections here, what you will note here is that if you go to bulk deals, you will see that on 21st of March 2025, Vanguard Group, which is a FI, have bought some stakes in this particular company. Now, I'm not saying that we need to go and buy this stock because FIs are buying this, DIs are buying it. But what I'm trying to explain to you is that these are some positive triggers that we need to keep in mind and try and study what is happening with this company. Also, if you look at the insider trades, what you will note is that in the month of December as well as in the month of November, the employees of this company have been also buying the stake. So overall, the sentiments about this particular company seems to be positive, and that is one starting point for us to dig deeper into this company. Now you may have a very important question to me that, Rahul, if you look at the PE chart of this company, what we note is that up until April 2023, the PE of this company used to be well below 20, but all of a sudden since April 2023 onwards, the PE has expanded. So what is really going on in this company, and is that not a risk that this company is a very high PE? That is absolutely the question we need to ask when we are doing our research. So why is that from April 2023 the PE of this company has expanded? So if I show you the P&L data of this company, you will very quickly note that from March 2023 onwards, the top line growth you see in the business is phenomenal. Before that, the top line growth was very flat. So the PE was well below 20. That investors were not paying attention to this company. But all of a sudden, since March 2023, if you see, the top line has grown beautifully. Also, if you look at the PAT of this company, the growth has been very good. That is one of the reasons that all of a sudden a stock starts to demand high premium, because the growth has been there in the business. Now, this is all past data. How do we know that the company is going to grow in the future as well? Because if you want to ever buy any stock, what you need to see is the future prospect of a company's growth. Then only buying a high PE stock is justified. Otherwise, you might end up buying a stock at a very high PE, which is the case right now. So if I have a look at the current PE, it is almost at 48 PE. The question you need to ask is that, is this PE sustainable in the future or not? And the answer lies in whether the company can grow the top line and the bottom line in the next 2 to 3 years of time. So let's find out. So as per their management commentary in October 2024, the company is looking to grow between 25 to 30% growth guidance for the next 2 years. So clearly management is seeing some growth here, but it doesn't mean that we should should believe management, we should do some more research and try to find out why management is so positive about the growth of this company. So for this, couple of reasons that I can see in this particular stock is that if you go and have a look at the order book of this company, as of January 2025, the company is sitting at around 831 crores of order book. Now put this in context of trailing 12-month revenue that the company has generated. They did around 660 crores of revenues in the last 12 months. They are sitting on an order book of around 831 crores. So clearly they have got visibility for their revenues for, let's say, another 1.5 years. The second important growth trigger that I can see in this particular company is that if you look at the second bullet point here, that the company is expanding. They are injecting capex into their business because they are building the plant capacity here in Kheda in Gujarat, and this plant is likely to be ready in the month of October 2025. This is their Kheda facility in Gujarat, and what the management is also saying is that by FY26 third quarter, this company will be able to ready in terms of capacity to deliver orders worth 1200 crores. That is the intent. So clearly the company is putting capex. They want to be able to get to a capacity which can deliver revenues up to 1200 crores. So I can see from order book as well as capacity expansion that the company is banging on the growth. Now whether they will achieve the growth or not, we don't really know because that is all going to be in future. But right now you see the reasons of why FIs, DIs, internal employees seem to be very positive about the growth of this company. Now I did promise to you earlier in the video that I will remain unbiased. So now I'm going to discuss the risk that I see in this particular company. If you see the bifurcation of the revenues, you will note that export takes around 52% of the company's revenue and they rely on domestic in terms of 41%. Now these exports of 52%, we know what is happening right now globally in the world, that the economies are unstable. Tariff war is going on between US and China. So there is definitely an uncertainty. And I do not know when you're watching this video, but I'm shooting this video on 18th of April. A lot of the bad news might have been baked into the price of this company because investors do understand that this company is dependent on exports by around 52%. So a lot of pain this company might have already seen in terms of the pricing, but it doesn't mean that it might not see some further pressure. If I in fact show you the commentary from their management, what their management is saying is that they are also admitting this as a risk, that some of their hydrogen projects that were lined up might see some delays. Now, I cannot predict this, you cannot predict this. As an investor, you need to go with open eyes in terms of assessing the risk, in terms of looking at the growth prospect of this company for the next 2 years or 3 years, because the tariff situation is likely to be stabilizing in the next 6 months to 1 year, in my view. So definitely there may be a short-term pain, but I think we need to look at the holistic picture of the company and weigh out the pros and cons as I've described in this particular stock. If you like this analysis, request you to hit the like button. Let me know in the comments a simple thank you. It motivates me to bring a lot of content for you at zero cost. With that, let's move to stock number 2. Moving on to stock number 2, which is Azad Engineering Limited. You may say that, Rahul, what's wrong with you? Why are you all of a sudden talking about engineering companies? Nothing wrong with me. It's just that FIs have been very, very bullish about these companies. So I've included this company, but don't worry, stock number 3 is not going to be an engineering company. But coming back to Azad Engineering Limited, if you go to investor sections, very quickly you will note that FI stakes have gone up in the March quarter. And if you look at the DIs, that stake have also gone up in the March quarter. If you look at the FIs and DIs, so if you look at the FIs, some very, very reputed name here. And if you look at the DIs, very, very reputed name here. But one thing you will note here is that promoters in this company, so if I show you the promoter stakes, they have come down in the March quarter. And that brings me to a very, very important point, that these FIs and DIs, they have not bought the stake in this company through the open market. What has actually happened here is that the company did a qualified institutional placement on 25th of January 2025, and FIs and DIs participated in this qualified institutional placement QIP, and they picked up stake in this company at 1280 per share sort of a pricing. Now the reason I am sharing this with you is that it is very, very important for us to understand the timing of this QIP, because it came in the month of February 2025 when the world was going through a lot of turmoil and uncertainty. Indian stock market was not doing well in the month of February 2025, but this company has managed to pull together their QIP, meaning that investors have shown confidence and faith in this particular company. What is driving that conviction in this company? We need to understand that. So let me present you some unbiased commentary for the next 2 to 3 minutes. So the first point is that if you look at the P&L account of this company, very quickly you will note that the company has been growing its sales at a very, very good rate. If you look at the net profit of this company, has been growing at a very, very good rate. In fact, last 3 years, sales have been growing at 41% CAGR and profit have been growing at around 65% CAGR. So the company has seen seen good growth rate in the last 2 to 3 years. But of course, past is past. We do not know whether they can continue to bring this growth in the future or not. So in order to find out whether the future growth is likely to be there or not, I was listening to their management commentary. And if you listen to this clip that I'm going to play now, you will note that in the month of October 2023, the order book of this company was around 2000 crore. And in the month of February 2025, the company is claiming or making a statement that they have got 6,000 crores of order book, which has gone up by 3 times in the last 16 to 18 months. This is a phenomenal growth in the order book, because this company that is sitting at 6,000 crore order book, if you look at their revenues, if I show you the revenues, is only 423 crores in last 12 months. So they're sitting at more than 10 times the order book in the last 16 to 18 months. I'm going to now play this clip so that you can hear it from their management itself.
Our order book in December 23 was about 1,800 to 2,000 crores. And in the last 12 months, today it's at about 6,000 crores. So it's important to understand what happened in the last 12 months, that led to the surge in the order book from 2,000 to about 6,000 crores. So the message is important that, Azad has been working with our OEMs for the last 10 years, and we've never seen a surge of orders and contracts of this size. And there is a definitive reason for these orders to be in place. And the reason is Azad supplies mission and life critical parts which have a longer qualification cycle. And historically, Azad has always focused 75% on qualifications and 25% on revenues. And now, since most of the qualifications have been completed, Azad was able to sit down with each of our customers and lay down the roadmap for the next 5 to 7 years. And that's why you see, the demand has opened up, which was available to us has now opened up. And that's why you see a lot of these contracts coming in.
Now, typically, you should not believe the management outright. What you need to do is find out who have been placing these orders so that you get very, very good clarity about these orders. So what I did was I went to exchange to look at what they have filed in the exchange in the last couple of months. And I found that on January 29, 2025, they got an order from Siemens Germany for around 811 crores, which is going to be executed over the 6 years of time frame. So around 130 crores, 120 crores of a run rate is yearly, even if I evenly spread it out, is what I can see here. Another chunky order that I see on the exchange that they filed is on January 15, 2025. They've got an order from GE in US, and this order is almost 960 crores. So they seem to have got some legitimate, very, very good companies that have placed orders with this company. And therefore, I think this order book is not made out of thin air. There seems to be some authenticity about this particular company's order book. Now, again, if you look at the PE of this company, you will note that up until August 2024, the PE used to be at around 29. And after that, if you look at the PE of this company, shot up to 134. And, it has remained elevated, more than 100. In fact, when Indian stock market was falling right through November, December, the PE of this company remained very elevated, 159. It's only in January, February, the PE has calmed down a bit, but it is still not dropped below 100. And I think the order book that we saw just now may be playing into this PE, high PE, because of course investors are seeing some possible growth in the future, and therefore they are willing to pay premium for this company. Now, what is the key risk with this company? So if you look at my screen, you will note that 87% of their revenues come from exports. And this is an important point, as again I mentioned about Anup Engineering, that the world is going through a lot of uncertainty and volatility right now. We don't know how much of their revenues may get impacted because of the tariff war. So here is what their management said about the impact of tariffs. Listen to this carefully.
Because President Trump is announcing tariffs, does it impact your business?
Okay, so if you've known Azad's historical performance and our competitiveness, so we are already at about 20-25% more competitive than China, and about 30-35% from the rest of the world. Now, if tariffs were to be, talking about looming tariffs, India's, as far as I understand, India only has reciprocative tariff, which are, lower in terms of under 10%. But for each of the other geographies that we compete with, I think the tariffs are pretty heavy. So we were already very competitive, and with these tariffs on China, Mexico, and other places, I think Azad's order book is only going to get flooded, because this is what we understand from our customers also, and we are able to see that.
Now, what I gather from this clip is that what their management is saying is that if China and Mexico sees relatively higher tariffs than India, then they're likely to be in a much better position because US will have limited resources to fulfill their needs. But again, we need to admit this as a risk because the world is very, very uncertain right now. If you're liking my way of analyzing companies and want to learn more, then you can consider joining my YouTube community because almost on a daily basis, I post about various assets on my YouTube community exclusively. I cover stocks, mutual funds, ETFs, global macros, local macros, a lot of things that you are practically going to gain insight about the world of investing. The feedback of my community has been excellent. If you want to join, simply go to my channel, find the join button and be my guest. With that, let's move to stock number 3. So stock number 3 is Adani Wilmar Limited, and it is not an engineering company, it's a FMCG company. And the reason I'm presenting to you is because of a lot is happening in this company. For a starter, Adani company is going to exit Adani Wilmar Limited in 2 steps. Listen to this clip.
In a major news that just coming in, Adani Group will exit its FMCG company Adani Wilmar. This will be done through 2-step process. The first one being an OFS through which it will meet the minimum public shareholding guidelines, and then followed up with selling the entire stake that Adani Group holds in Adani Wilmar to an arm of Wilmar International.
As you would have heard that Adani is going to exit this company in 2 stages, and stage 1 is already done. So if you go to investor sections, what you will note is that in the promoter section, you will see that the promoter stakes have come down from 87% to 74%. This has mainly happened because Adani Commodities LLP, which is the company that is holding the stake from Adani's perspective, have reduced their stake from 43% to 30% because they have done an OFS, which is offer for sale. And if you look at the offer for sale pricing, extremely important when you make investing decisions. So if you go to NSE website, you will note that the offer for sale was done at 275 rupees per share. And if I show you the investors in this company, let's go to FIIs and DIs. You will note that FIIs I can't see here, right? But if I look at the DIs, you will see some reputed companies that have picked up stake in this particular company in the month of January 2025. Now, few very, very important points about Adani Wilmar Limited. Number 1 is that the name of the company has changed. So if you go to your Demat account, you are not going to find Adani Wilmar Limited. You are going to find AWL Agri Businesses Limited. Also, have a look at this brand called Tops, which is making sausages and pickles, etc. And very, very recently, Adani Wilmar Limited acquired this company called GD Foods Manufacturing Private Limited, which owns the Tops brand. This company makes somewhere around 386 crores of revenue that is going to get added into Adani Wilmar Limited's PNL. Now, if I speak about this company's PE ratio, have a look at my screen and you will see in the last 5 years, the median PE of this company has been around 86. And right now the PE has calmed down a lot. In fact, it has come down to almost 30 at the time of recording this video. So from a valuations perspective, the PE has contracted a lot, which is a good news for investors, especially the value investors. But if I show you the growth in this company in terms of top line and bottom line, if you look at the last few years, you will note that the top line has not grown significantly. And that's what you will find in most of the FMCG companies. But if you look at the net profit of the company, they have gone up 1215 crores trailing 12 months. So significant growth in PAT is what we can see in this company. Of course, because the sales have been very, very flattish, you can see that the PE has contracted in my view. I would highly encourage you to go and do some more research about this company, Adani Wilmar Limited. I'm just leaving it here and have pointed you to a direction to go and do some further research. And please make sure you're not taking any of these stocks as recommendation. I'm trying to make you aware of how to go about looking at companies where FIs and DIs are picking stakes. With that, let's move to stock number 4, which is Transformers and Rectifiers India Limited. If I show you the investor pattern here, you will note that in the quarter of December 2024, FIs did some buying, as well as in March quarter also a little bit of buying done by FIs. And if I show you the names here, we are able to see Goldman Sachs, for example. So reputed FIs seem to be picking stakes in this company in the last couple of quarters. And if you look at the DIs, in December quarter, the stakes gone up, but in the March quarter, it has come down slightly. And if we can see the names here, HSBC and Invesco have been investing in this particular company. Now, what is so interesting about this particular stock is that if you look at the order book of this company as of 31st of March 2025, they are sitting at around 5,100 crores of order book. And if you look at their revenues in FY25, they did around 1950 crores of revenues. So almost 2.5 times of revenues is their order book. And of course, if you see the inquiries under negotiation, that is in fact a huge number. So that is possibly one reason, because the company has a very, very healthy order book. FIs and DIs seem to have upped the game here. Now, if you look at the P&L account of this company, what you will very quickly note is that in the last 3 years, the sales have been almost constant, but leading up to March 2025, the sales have jumped hugely. And also, more importantly, if you see the PAT, it used to be at around 40 crores here in the last couple of years. But in FY 2025, the PAT has jumped almost 5 times. That is phenomenal. And when I was looking at their PAT margin, so if I show you this picture here, you will note that their PAT margin has improved drastically. It used to be at around 8%, 9%. It has gone up to around 13%, meaning that the company has become more and more efficient in the last 1 year or so. And that is what is being reflected in the PAT numbers as well. Now, here are some exciting future happenings for this particular company as given by their chairman as closing comments for FY25, that they are looking to extend their capacity. Of course, additional commercial production will start from May 2025. But also, if you look at in the next 15 months, the company is going to put around 550 crores of capex infusion into the company. By February 2026, the company will have the total capacity exceeding 75,000 MVA. So overall, the summary is that the company is putting a lot of capex to enhance their capacity to meet the order book that we saw previously. Now, if you look at the PE chart of this company for last 5 years, you will very quickly note that the PE of this company used to be at around 475 in April 2024. The PE has calmed down a lot because the earnings have gone up in the last 12 months or so. That's why the PE has come down to almost 75. And this is looking much better than where it used to be back in April 2024 when the PE was at around 475. Now, my last point about this particular company is that if you look at their revenue breakdown, you will note that they are more relying on the domestic, which is 92% of their revenues in FY24 came through domestic, while 8% was export. So in my view, from a tariffs perspective, there is not a huge risk as such in this particular company. But again, please go and do some detailed research about this company. There seems to be very healthy order book. There seems to be capex infusion in this company in the next 15 months, about 550 crores. So there seems to be some growth coming up in this particular company. And what you need to do is have a look at some more deeper insights about this company. I've only scratched the surface here. So in this video, I've spoken about 4 stocks. None of these are recommendations, but what I've done is I've brought some data backed analysis to you. And if you like this analysis, hit the like button. Let me know in the comments, out of the 4 stocks that we have discussed here, which one you think has a better future prospect. Let me know in the comments. Would love to read your comments. And also, please don't forget to check out Growth School's 180-minute AI crash course. You will find the link in the description and in the pinned comments. With that, I hope to see you in my next video. Until then, keep rocking.